If you spend any time at all looking at the South African economy, you know the exchange rate is a real flashpoint.
Yeah.
It's frustrating, it's complex, and it's always generating debate. And right at the heart of that is this one phrase. It's almost become a catchphrase, hasn't it? This sort of national economic wish. The rand should be 7 rands to the dollar. You hear it everywhere. People say, oh, a governor said it, or they remember it from somewhere. But is that real? Is it an actual economic target or just wishful thinking?
Well, that phrase, that 7 Rand idea, it's become completely detached from where it actually came from. It's been taken, frankly, out of context. So our mission today really is to take a deep dive. We're going to look at the underlying data, the hard numbers from places like the National Treasury, Stats SA, the Reserve Bank. First, let's just tackle this 7 Rand fallacy, debunk it. And then, more importantly, let's analyze the actual structural things driving the Rand's weakness right now.
Okay, let's do that. Let's unpack it and try to get to the truth behind the myth. We absolutely have to start there. Where did this 7 Rand thing even originate? You said a governor, but it wasn't a forecast.
No, not at all a forecast. It was about illustrating a concept, a purely theoretical one, actually, called purchasing power parity, PPP.
PPP. Yeah.
And for anyone listening, PPP is basically the idea that, well, your money should buy the same amount of stuff wherever you are. So a basket of goods should cost the same in dollars as it does in rands once you convert.
Okay.
And the governor used a very common example, the Big Mac burger price. The point was, look, theoretically, for the rand to buy you the same Big Mac as a dollar buys in the U.S., the exchange rate would need to be around 7 rands to the dollar.
Okay. So it wasn't the rand will be 7. It was for purchasing power to be equal, it would need to be 7. A hypothetical.
Exactly. Purely hypothetical. A measure of theoretical parity, not market reality. And here's the kicker. This is what shows it's a fallacy now. The rand has lost so much buying power over the years that if you actually buy a Big Mac here today and convert the rand price back to dollars at the current exchange rate, it costs significantly more than buying one in the U.S.
Oh, wow. So we're not even close to that theoretical parity point anymore.
Not even close. We're actually further away, which makes the idea of 7 Rand being achievable anytime soon
Economically impossible.
pretty much. As the analysis suggests, it's economically impossible in the current climate. The exchange rate isn't set by old hypotheticals. It's set by investors reacting to the economy right now. Cold, hard facts.
Right. It's a price, isn't it? The price investors are willing to pay based on risk and return.
Precisely. If investors aren't confident, if they don't want to hold rands, they sell them. The price falls. Simple supply and demand.
So if it's not wishful thinking or old hypotheticals driving the rate, we need to look, under the hood. What is the big structural issue for the rand right now? Because the data points to something pretty serious, this idea that the country is bleeding capital.
Yes. And this is, I think, the absolute crux of the issue. It kind of overshadows everything else right now. The data we've looked at, coming from Stats SA, from the Reserve Bank, it confirms a really alarming trend. We've seen the worst decline on record in foreign direct investment, FDI. That's the capital bleeding you mentioned.
Worst decline on record. That's quite a statement.
It is. It means foreign investors are either pulling their money out, selling rand assets, taking the dollars, or they're just not bringing new money in. Either way, the flow is negative.
And explain for us just quickly why that directly weakens the currency, the mechanism there.
It's pure supply and demand again. If a big foreign company wants to pull its investment out, it has rands, right? It needs dollars to take home. So it sells those rands on the open market. That floods the market with rands, increases supply. At the same time, it's buying dollars, increasing demand for dollars.
More rands available, fewer people wanting them, more demand for dollars.
Exactly. The price of the rand has to fall against the dollar. That dynamic, that capital outflow, is the main engine driving the weak exchange rate we're seeing persist.
Okay, let's stick with that for Section 2. We know what this record capital decline, but the when and why are crucial. You mentioned this really to hold as of 2018. What happened then? Why did things shift so dramatically?
Yeah, that 2018 point seems to be a real inflection point according to the analysis. Before that, you might have had capital outflows, sure, maybe due to global events, but they tended to be more temporary. What seems to have started around 2018 was more structural, a sustained loss of confidence. The sources point toward domestic issues really coming to the fore then. Things like policy uncertainty, worries about governance, and critically, those sovereign credit rating downgrades.
Ah, the downgrades, right. That signals higher risk to international money.
Absolutely. It makes borrowing more expensive and it makes investors very nervous about the long-term stability. So this failure to attract or even just keep hold of foreign capital, it has huge knock-on effects.
It's not just the exchange rate, is it?
No, far from it. It directly limits the country's ability to grow. Less investment means fewer jobs, slower economic activity. It contributes to unemployment, drives up borrowing costs for the government and businesses. It's a major drag.
So declining FDI isn't just like a number on a spreadsheet. It's a fundamental problem feeding into the weak rand, and it's tied directly to how investors see the local risks and opportunities.
Correct. And connecting this to the bigger historical picture helps understand why this post-2018 period is different. Currency movements are always influenced by global stuff, big money flows.
Sure.
But when you have serious local structural problems layered on top, like this capital flight, it changes the whole game. It makes the currency much more vulnerable.
Let's look at that history then, because it really highlights the difference. There was that period, 2011 to 2016, where the rand weakened quite a bit. But that wasn't mainly about South Africa specifically, was it?
No, not primarily. The analysis suggests that was largely driven by external events. Specifically, the big one was the European debt crisis.
Ah, yes. Greece, Spain.
Exactly. And when you have that kind of global panic, investors run for safety. And the traditional safe haven is
The U.S. dollar.
the U.S. dollar. So capital flowed into the dollar from almost everywhere, including South Africa, pushing the rand weaker. And what's really interesting is that this happened even though South Africa's mineral exports were actually increasing then as the world recovered from the 2008 crash.
So even with some positive local factors, the global tide was just too strong against the rand. It was more cyclical, driven by outside fear.
Precisely. Cyclical, not necessarily structural failure here. Now, contrast that with the next period, roughly 2016 to early 2018, the rand actually strengthened quite nicely then.
It did. That period kind of shows what can happen when things align, doesn't it?
It's a perfect example. You had foreign investment picking up again, as it should have been in a better global climate. But then you had two other big factors lining up. Locally, the South African Reserve Bank was hiking interest rates. That makes holding rands more attractive, offers a better return.
Right, higher yield.
And then externally, almost perfectly timed, starting around 2017, the U.S. dollar itself started to weaken globally. Part of that was linked to the Trump administration's tax reforms.
Okay, so higher SA rates pulling money in, and a weaker dollar globally pushing the rand up, a kind of double boost.
Exactly. Now that leads to a really important question for listeners today. If raising rates helped back then, why isn't it fixing the problem now? We've seen rate hikes recently, but the rand is still weak. Why no 2016 repeat?
Yeah, that's a great question.
Because the underlying problem is different. In 2016, higher rates helped counter weaker global sentiment. It was about attracting yield-seeping money in a nervous world. Now, the problem since 2018 is much deeper. It's structural fear among long-term investors, foreign direct investors. They're worried about fundamental issues. Policy, governance, infrastructure, ESCOM.
So high interest rates might attract some short-term hot money, but it doesn't fix the underlying reasons why the big long-term investors are staying away or leaving.
That's exactly it. High rates might put a plaster on the wound, slow the bleeding maybe, but they can't heal the deep structural damage that's causing this record capital flight. You need to fix the fundamental reasons for the lack of confidence.
That really underscores the severity of what started around 2018.
Okay, but look, whenever the rand takes a dive, inevitably that other story comes up. The bank currency manipulation scandal. People point fingers. It was definitely wrong. Criminal even needs dealing with, but is that why the rand is, say, 18 or 19 to the dollar today?
No. It's really important to separate these things. That manipulation is not responsible for the current level of weakness. It's a different beast entirely. When we talk about that banking scandal, we're talking about banks fiddling with the buy-sell spread for short periods, making a quick, dishonest buck on the tiny difference between the price they buy currency at and the price they sell it at.
So like skimming a tiny bit off lots of trades for their own profit. Precisely. It involved short-term trading positions. It was about profiting through spread manipulation. It's illegal. It's damaging to trust, yes, but it operates on a micro level, transaction by transaction. It doesn't have the power to cause the kind of sustained, multi-year, record-breaking decline in the rand's value that we've seen since 2018. That comes from the huge macro forces, the massive capital outflows we've been discussing.
So the analysis is clear. that manipulation has no contribution to the weakness at these current levels. It's almost a distraction from the main event.
You could say that. It's a serious issue that needs addressing, but it's a sideshow compared to the massive structural driver of capital flight.
Okay, so wrapping this all up for the person listening right now, what's the main takeaway? We started by knocking down that 7 Rand fantasy. Where do we end up?
We end up with a pretty stark economic reality. The Rand's value ultimately reflects how investors feel about the South African economy. It's their response.
And right now, that response, confirmed by data from the Reserve Bank, from Treasury, is driven by this unprecedented capital flight that started around 2018.
Exactly. The central lesson here is context matters. You can't just pluck a number like 7 Rand out of the air, especially one based on an outdated theoretical PPP calculation. The exchange rate is like a country's economic report card judged by global investors. And right now, that report card reflects deep concerns. International long-term investors are, frankly, voting with their feet because of structural worries. That's basic supply and demand pushing the price down.
Which leaves us with a final thought for you, the listener, to chew on. If the core issue is investor confidence, specifically attracting and keeping foreign investment, what concrete specific policy changes, maybe around governance, maybe around making it easier to do business, tackling infrastructure problems, what would actually need to happen first before the Rand could even realistically begin to recover some of that lost ground and head back towards historical strength? Because until those fundamental issues, the ones that really took root around 2018, are addressed head on, that dream of 7 Rands, well, it's going to stay firmly stuck in the past.